if you were going to do an S Corp tax election, I think you're much better off doing it with an LLC because you have a lot of significant benefits with an LLC you don't have with a corporation, especially as it relates to asset protection planning.
What is the difference between an LLC and an S Corp?
So an LLC is a limited liability company. It's a bit of a hybrid structure between a partnership and a corporation. And the default tax status of an LLC is pass-through, meaning the income or loss, if you lose money, passes through to the members or owners of that LLC. An S Corp technically is not a legal structure. There is such thing as a corporation, and an S Corp is a tax election of a corporation. So a corporation essentially has shares and you have shareholders. You can basically have unlimited shareholders, whereas an S Corp has a little bit different. You're limited to 100 shareholders. They can only be U.S. persons. You can't have other entities be shareholders of an S corporation because of the laws associated with that tax structure. Whereas an LLC can have foreign owners, U.S. owners, other LLCs can own LLCs, trust, other corporations can own LLCs. So the ownership is a little bit different. The big thing people talk about, though, when comparing S Corps to LLCs is most likely the concept of taxation. An S Corp or a corporation with an S tax selection gives the owner of the business the ability to pay himself a fixed salary, and he only pays the self-employment tax, or what I call social tax, which is your Social Security, Medicare, Medicaid, that sort of thing. But he would only pay the social tax on his salary. So, for example, in an S Corp, let's say the business makes $200,000 in profit, and the owner says he wants to pay himself a salary of $50,000. Well, he would only pay that 15.3% social tax on the $50,000 instead of the full profits. However, you have a limited viability of using that, though, because as it is right now, you only pay the social tax up to your first $147,000 anyway. So if you made $200,000, you would only pay 15.3% on your first $147,000. The advantage there would be approximately $100,000 in a LLC with a default tax status. You would have to pay the 15.3% on that additional $100,000, whereas in an S Corp, you would only pay 15.3% on the 50. So kind of clarify that a little bit. In an S Corp, if you made $200,000, you would pay the social tax, or 15.3% on your salary, $50,000. If you had an LLC with the default tax status and your profit was $200,000, you would have to pay the 15.3% social tax on $147,000. So the difference is approximately $100,000. So 15% of that is roughly $15,000 difference in tax. So that's what people talk about, the benefit of having an S Corp over a default status LLC for tax purposes. However, you can also elect S Corp tax election on an LLC. So if you were going to do an S Corp tax election, I think you're much better off doing it with an LLC because you have a lot of significant benefits with an LLC you don't have with a corporation, especially as it relates to asset protection planning. But if you were sued for $1 million and your creditor is coming after you for that $1 million judgment, and they're issued a judgment against you for $1 million. If you had a corporation or a corporation with an S tax election, your creditor could actually take the shares of your company and then liquidate the company to satisfy that judgment. Whereas in an LLC, if it was structured correctly and you've done it in the right state, in the right way, then they don't have the ability to do that. In most cases, they would only have the ability to get a charging order against that LLC, which protects your assets and protects your distributions out. So you wouldn't lose the business or the business assets or that sort of thing. So in my opinion, if you want an S Corp for the tax benefits, you're much better off having an LLC. and then filing the necessary paperwork with the IRS to elect S Corp tax status for that LLC. I hope that's clear.
Is it better to create an LLC or a C Corp if you plan to raise money?
More than likely, it's going to be better for you to create a corporation or a C corporation to raise money, but it depends on the scope and the nature of the business and who your investors are. So, for example, if you're raising money from a large VC fund or big sophisticated investors, the only reason they're investing money in your startup is because they have an exit plan in place. They're planning to either take your company and sell it to another group that's rolling up maybe in that industry and getting a higher multiple, or maybe they're looking to take the company public or something like that. And in all of those cases, you're going to be better off having a C Corp because that is going to be their preference. But if you have maybe private investors, maybe somebody who's more interested in the operational side of the business and they care about some of the other benefits of an LLC, could be better to have an LLC in that case. So it really depends on who your investor is and what they want. So that would be probably my first step in looking into the company structure is who am I looking to raise money from and what kind of people will be investing in this project. You know, if I'm starting a small software company that I'll probably have 2 or 3 founders and we're planning to just run this thing and grow it pretty well, but keep it as a private company, probably want to keep it as an LLC. But if you're starting something with the intentions of taking it public or selling it to a larger enterprise or selling to a publicly traded company or something like that, you're better off as a corporation.